This week on 31st of May, we have 3 Power Pack webinars waiting for you. At 10 a.m., we have Know Your Insurance, Hidden Clause and Terms in Health Insurance. And at 11 a.m., we have a deep dive into the SIP calculator. Simultaneously at 11 a.m., Plan, Pause and Pivot. Financial planning for non-linear life. Click on the registration link in the description to join the webinars to make your weekend a learning weekend.
Equity markets have proved to be quite volatile in 2025, often surprising investors with the direction that they take. Now, during a market drop, rookies and pros play it very differently. So in this video, we're going to look at 5 ways in which pros play this game very differently and what you can learn from them. So first off is that pros don't try to catch the bottom. Now, often what you hear is that you want to invest when the market bottoms out or you're waiting for a big correction to happen. Big corrections don't usually happen. It's small corrections, plateauing, another small correction. You might have 1 or 2 days where the market misbehaves, but by and large, the corrections are long term and you need to zoom out to be able to see that. So waiting for the bottom is really not going to work for most investors and you're going to miss a lot of bottoms and the recovery can be much faster than you anticipate. Pros get this, but most novice investors miss out on understanding that the trajectory of markets is non-linear. The second way in which pros get this right is that they aren't hesitant to sell losers. They willingly prune their portfolios. They know that when the context and the cycle changes, it's important to change the portfolio as well. So waiting for a stock to recover is something that pros simply don't do because they know that from a long-term perspective, this is not going to work out and the focus shifts towards creating wealth with the new ideas that are working in today's context. So trimming your losers is an important lesson that we can take away from this. Another great pro hack is having asset allocation. So many of us think that we're aggressive investors only if we're over invested in equities, but pros understand that there is a need to be patient with cash and to also capture opportunities in other asset classes. After all, the goal is to create wealth. It doesn't matter where you do it or how you do it from. So this key lesson of having asset allocation can actually help you deliver more stable returns, keep you more open-minded and focused on wealth creation. So this is a great takeaway. Coming to the fourth point, pros are cash rich. This means that we talked about how they prune their portfolios and take out some of the old ideas and make space for the new ideas. It doesn't mean that they deploy into new ideas immediately. This is something that happens in a phased manner and liquidity is something that they plan for. So in a year where they expect a lot more volatility and bargain buys, they make sure that they have more cash. This means they're focused on saving rather than spending and that they're also looking at restructuring and optimizing their portfolios. Last but not least, pros focus on the long term. This means that knowing that chasing returns in a year like this is just not going to work because you may have it, you may not have it, but what actually matters is how much you contribute, not how much you earn because the earnings will come in forward years and earnings are always cyclical, right? Which means you'll have a bumper harvest and this is the time to sow your seeds. So these were some 5 takeaways from pro investing which can help you in your wealth creation journey. If you enjoyed watching this video, then subscribe to our channel for more content like this.